This is the Southside School of Financial Freedom Watch List and Market Report for the week ending February 12th, 2022. Our question this week is, what are stock market drivers? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 1.43% on Friday and was down minus 1% for the week. The S&P 500 decreased minus 1.9% on Friday and was down minus 1.82% for the week. The Nasdaq decreased minus 2.78% on Friday and was down minus 2.18% for the week. Looking at the week, we can see that there were 7 up finishes versus 8 down finishes for the major indexes. On Monday, the Dow Jones Industrial Average finished barely up, less than 1%, while the S&P 500 and the Nasdaq finished down. On Tuesday and Wednesday, all 3 major indexes finished up. On Thursday and Friday, they all finished down. The new unemployment claims were 223,000 versus 230,000 expected. Inflation surged 7.5% on an annual basis. Home buyer demand for mortgages dropped by 10%. It was reported that consumer debt totaled $15.6 trillion in 2021. The U.S. posted a record trade deficit in 2021. The U.S. 10-year Treasury yield topped 2% for the first time since 2019. And oil jumped to over $94 per barrel. New unemployment claims, inflation surges, mortgage demand, consumer debt rising, the U.S. trade deficit, the U.S. 10-year Treasury yield topping 2%, and a jump in oil prices are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are market drivers? A stock market driver is a factor that has a material effect on stock prices. Stock market drivers affect change in stock prices and occur at many levels of the stock market. There are both micro and macro drivers of the stock market. Micro drivers cause change at the company level and thus the individual stock price. 3 key traditional micro stock price drivers are corporate earnings, dividends, and valuation. Please note there are many others. Macro drivers cause changes in the overall stock market. 4 major macro stock market drivers are the Federal Reserve, the U.S. 10-year Treasury yield, the strength of the U.S. dollar, and the price of oil. And again, please note there are many others. Do you agree with these, that these are micro and macro drivers of the stock market? Are corporate earnings, dividends, and valuations still relevant? Does the Federal Reserve, the 10-year U.S. Treasury yield, the strength of the dollar, and oil do they really affect or drive the stock market? What do you think? Do you have an opinion on what drives the stock market? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it's not your fault. It was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI. Read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list from the week ending February 12, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Tilray Brands Incorporated, ticker symbol TLRY. It's in the third column. It increased 19.66% for the week and was up 1.71% on Friday. Tilray Brands Incorporated engages in the research, cultivation, production, marketing, and distribution of consumer and medical cannabis products. It operates through 5 business segments: a cannabis business, a distribution business, a beverage and alcohol business, a wellness business, and businesses under development. Looking at a summary of results, you can see that Tilray has increased only 1.28% year to date. I did generate cash flow from Tilray this week, and I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY so far in 2022. The Southside portfolio is down minus 11.36% versus minus 7.26% down for SPY, a difference of 4.1%. The Southside is losing to SPY by just over 4%. The primary reason the portfolio is losing is that Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market despite its recent rise in the last 2 weeks. Will it bounce all the way back in 2022? Stay tuned to find out what happens to Bitcoin and the Southside portfolio. which will remain heavily invested in Bitcoin. The portfolio is 82.21% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 5.21% of the portfolio. Cash is 12.58%. The cash flow generated for this week was 0.69% of the portfolio account value. The account value changed by 5.88%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.84%. I sold option contracts on 2 positions this week, 1 call and 1 put position. That ranged from $255.05 to $278.06. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.